It's actually the smaller markets around Latin America that have been the great performers this year. If we look at the Colombian market, it is up about 30% or a little bit over 30% in dollar terms this year. If we look at Chile, another Latin American market, it's up about 20%. So it's actually the smaller markets in Latin America that have done extremely well. Do they compare with Brazil in terms of size, liquidity, opportunity set, in terms of number of different companies that are listed? No, they're significantly smaller. Brazil is by far the largest component of the index that we track in Latin America, representing about 68% of the Latin American market. The smaller markets, the ones that I mentioned, Chile, Colombia, and Peru, only represent about 12%, with Mexico making up the difference with 20%. Some of the key themes that we're focusing on across Latin America from an investment standpoint is certainly domestic consumption. There has been a tremendous increase in income levels across Latin America, declines in unemployment, so that has resulted in a significant increase in the middle class across Latin America. If we just look at Brazil as an example, the middle class has grown from 42% of the economy to 53%, a huge jump over the last 8 years, and that has very significant implications for consumption across Brazil and how we invest. So for example, retailers that cater to the low-income population across Brazil, for example, would be extremely interesting. And I mentioned Brazil, but similar trends are taking place across Latin America. I think the reason for that is largely that Latin America has a very solid fundamental story. If we look at the sovereign balance sheet, for example, low levels of GDP or debt to GDP, fiscal deficits that are small, manageable, current account deficits that are largely financed with FDI, foreign direct investment. So we think the balance sheet health of Latin America is very good. And there are very significant investment opportunities across the region. And I think because Brazil is a large economy and one that has been in the spotlight, I think that is attracting money into Latin American markets. Each market is a little bit different, but on whole, we're looking at growth this year at about 5%, slowing somewhat to around somewhere between 4 and 5% for 2011. And these are strong growth rates in a Latin American context. At this point, with Colombia having rallied so much and Chile having rallied so much, we think those gains need to be consolidated for a while, and Brazil has been the significant underperformer. And Brazil is still down about 10% on a year-to-date basis, largely driven by the overhang of the Petrobras deal. Petrobras is the large Brazilian oil company, state-owned, that is going to come to the market soon with a $25 billion offering. So that's been an overhang for the Brazilian market for quite a while. And we think once that deal gets done, that overhang will be lifted and the Brazilian market can start to perform better. So we're quite optimistic on the Brazilian market looking forward over a 12-month period. We're pretty comfortable with the level of commodity prices. We think there is sustainable demand across the world, particularly coming out of China and the rest of Asia as they embark on their urbanization trends. Remember that China only has about a 48% urbanization rate, and that compares to Latin America at 77%, the United States at 82%. So Asia has a long way to go on the route towards more urbanization. And as they do that, there'll be very strong demand for commodities. Also, the other emerging markets, I mentioned Brazil, but all of the other emerging markets are growing significantly, and they're demanding commodities as well. So we see stable demand for commodities going forward, and therefore prices should remain at reasonable levels. The theme that we're playing right now that I've mentioned is the growth in the middle class and the consumption story, and really focusing on the consumers that are moving from the C and D class to the B class, or moving from the D and E class to the C class. That creates new consumption patterns, and there are many investment opportunities that are focused on the lower income segments of the population. I'll give you a couple of examples. One is retailers, for example, that focus on that part of the market. Another one is low-cost home builders with some mortgage availability for the low-income segment. Home builders have been growing very rapidly, providing homes for Brazilian families. There's also opportunities in the healthcare space, where with increasing levels of employment across Brazil, more people have jobs and access to health insurance. So healthcare providers have been doing quite well. So that's a part of the market that we really like. Another part of the market is the financial sector, because a lot of these consumers are getting first-time access to credit, and coming off a base of the economies across Latin America being very under-leveraged, there's a lot of room for credit to grow across Latin America. So we think there's a big opportunity also in the financial sector. The current candidate that is leading in the polls, his name is Dilma Rousseff, and she is the candidate of President Lula, who has been very successful as president of Brazil over the last 8 years and is very popular. And Dilma Rousseff is running on a platform whereby there will be policy continuity. So we're pretty comfortable with Dilma coming in as the new president, and we wouldn't expect a significant amount of volatility, for example, like the volatility we had when Lula first came into his first term. We wouldn't expect that to occur. We think the markets are pretty comfortable with the candidate, and she has come out in a pragmatic way and basically signed on to the current policies of President Lula. So while there could be some volatility, we don't expect anything very serious. The BNDES is an important lender from a development perspective around Brazil, and they have been for a very long time. My view on that is that there's plenty of room in the market for BNDES to be offering subsidized loans to different small and medium-sized enterprises across Brazil, and there will be plenty of additional capacity for the Brazilian financial system to be making loans also. So there is some degree of crowding out, and I don't completely disagree with the comment that was made, but I think there's plenty of room for credit growth around Brazil. And in fact, if you look at the largest Brazilian financial institution, which is called Itaú Unibanco, at this point, it's one of the largest financial institutions in the world. So there are plenty of credit opportunities in Brazil. I mentioned consumer loans are growing very fast, credit cards are growing very fast, loans to small and medium-sized enterprises are growing. So I think there's plenty of demand in the Brazilian market for not only the BNDES, but also the private sector banks.